How's it going, everybody? It's Stas here. So the markets had a pretty decent day today. The S&P broke even. The Dow went down 0.4%. The NASDAQ 100 went up 0.4%. And the Russell went up 1.5%. So today, we're going to break down some charts, my thoughts on the markets, stocks I'm looking at right now. So sit back, relax, go down below, get your $50 from M1 Finance. All you have to do is use my link, deposit $100, and we literally get $50 to invest with. It's that simple. And you guys could check out my Patreon if you want. All my real-time moves in the markets, all of those are linked right down below. So let's get right into it. And as you all know, we had the Fed meeting. Well, the Fed meeting was yesterday, Tuesday, and today, Wednesday. But we had Powell speaking today, which we will talk about in this video in a couple of minutes. So make sure you guys stick throughout this video. And of course, we got some earnings to talk about as well. A bunch of big companies reported today. But first, let's take a look at SPY and take a look at some technicals here. And honestly, guys, there's not much to say. I mean, look, SPY ended up consolidating today, and it's kind of been consolidating the past 1, 2, 3, 4-ish trading days, right above that previous all-time high from the middle of July at about 437, 438. And, I mean, there's nothing much to say. I mean, look, we're just consolidating, we're holding this point, and we're really at this point waiting for direction. I mean, look, on the 5-day, 5-minute, we're in this wedge. So for tomorrow, and quite honestly, for the rest of this week, I'm looking to see, do we gap under 437, maybe start going down to 435, or, excuse me, guys, do we break above 440? The resistance of the wedge here on the 5-day, 5-minute, and do we start pushing to all-time highs? And as of now, when I'm filming this video, the futures are down, so maybe we do end up seeing a downwards move, but it's really too early to tell. And of course, we're going to be seeing tomorrow morning what the futures are looking like pre-market. That should give us a better idea. But overall, I'm looking at the wedge here on the 5-day, 5-minute for direction, and for QQQ, it's let's take a look here. It's a lot of the same, quite honestly. I mean, looking on the 4-hour chart, we momentarily dropped under, and this was yesterday, under 365, which was that all-time high from in the middle of July. And yeah, we got to about, what, 360, 361. We held a higher low there, but now we're pushing up over 365 again. We closed above it today at close, which is a very good sign. So as long as we hold, and that's a good sign for the bulls, right? And as long as we hold 365, I think we could fill the gap maybe to about 368, 369, which again is that all-time high. We've talked about this many times in these videos. That is the high from the end of, well, we are in the end of July, but just a couple of days ago, guys. So look for this. Maybe the 50 SMA on the hourly chart breaks tomorrow. We fill the gap up to about 369. That'd be about a 1% move, and I'm thinking that could potentially happen here since we closed above 365. So let's talk about the Fed meeting in a nutshell here. We have a couple of notes. I have a couple of notes here on my iPad that I want to go over. And overall, guys, they're keeping interest rates near zero like they have been for countless of months at this point. And their asset purchases are remaining the same, right? They're remaining the same, interest rates near zero, and Powell said the U.S. economy is still a good deal away from making substantial further progress toward the Fed's dual mandates of stable prices and maximum employment. The Fed is not considering cutting its purchases of mortgage-backed securities before its overall tightening process begins. Chair Jerome Powell said that today, and quote-unquote here, there is little support for the idea of tapering mortgage-backed securities earlier than Treasuries, Powell also said. And Powell did say that there was some support for tapering the mortgage-backed securities at a faster rate than Treasuries once this process begins. Now, when will this process begin? Who knows? Some say in 2022, late 21. I don't know. I mean, who knows? I bet the Fed at this point doesn't even know what they're going to do. But of course, they have to, not put on a front per se, but they have to play it easy or make it seem like everything's all great, because I've mentioned this before. If they got on the camera, they were freaking out, it'd freak out everybody and freak out the markets. But as of now, interest rates near zero, asset purchases the same, which we kind of predicted, and really we knew that that would be the case. And a big fear right now is the Delta variant. That's a very serious concern in terms of the economy, where the employment numbers could be, economic shutdowns and so forth. So that's kind of what I'm watching. I'm tracking these cases. I'm looking to see what's going on in terms of that throughout the different states here in the U.S. and, of course, throughout the world as well. So what do you guys think? Let me know down below in the comments. What are your thoughts on the markets? Overall, it looks like stocks did pretty well today, other than the Dow. The Dow went down, but other than that, we had a pretty good day. And once that 2 p.m. report came out, and Powell started speaking, the markets did start moving up. You guys can see here on SPY on the intraday chart, it came out at 2 p.m. on the East Coast. SPY was at 438. Now we went all the way after that, about 40 minutes later, 50 minutes later, it went all the way to about $440, and then it sold off a bit at the close, into the close. But now after hours, we are starting to push back up. So what do you guys think? Shoot me a comment down below. Make sure to hit that like button if you all are enjoying the video. And don't forget to grab your 50 free bucks from M1 Finance. That's linked right down below. Literally free money with a deposit of $100. So, like I said earlier in this video, a lot of companies reported not only today, but this entire week. So many companies. So we got to talk about them. And now that I'm looking at my list right now, did I forget to put Facebook in here? Dang, guys, I'm an idiot. I forgot to put Facebook on my list. And I believe they just reported. So we might as well start off with Facebook, guys. And let me see on the live news tab what they ended up doing. Okay, Facebook did $3.61 EPS, which beat the $3.02 estimate. Sales came in at 28.58, or actually no, that's advertising sales. 28.58 billion. Total sales came in at 29.07 billion estimated, which beat the 27.82 billion estimate. So they beat EPS by a wide margin. They beat revenue as well, which is great. And when you're looking at companies like Snap, Facebook, Pinterest, kind of these, social media platforms, these giants out there, the biggest, stat that we're looking for is daily active users and monthly active users. Where is that? Oh, here it is right here. I don't know if you guys can see it, but I'll read it to you anyway. Daily active users came in at 1.91 billion for Q2 2021. That's up 7% year over year. Monthly active users are at 2.9 billion, up about 7% as well year over year. So not too bad. I'm not sure what, those numbers were, the past couple of quarters, but overall not too shabby there. And I'm noticing how Facebook stock is actually selling off quite a bit. We went from $377 today, which was an all-time high, down to about now $360 in the aftermarket session, which it looks like that is where we're consolidating and starting to curl back up here. So for Facebook, I'm watching this 4-hour 50 SMA support, which as of now we're holding, and we have held over the past couple of months, and 358 was resistance as well from the end of June all throughout the middle of July. So I'm thinking this dip could potentially, keyword is potentially, be bought up, and maybe we start pushing back up towards $375, $377. So I like Facebook here, guys. I personally don't own the stock anymore. I used to own it, and I've told this before to you all. I'll say it again very quickly, but I owned a lot of the FANG stocks, pretty much all of them other than Netflix. And I guess I see people using FAAMG now instead of FAANG. But anyway, guys, Fang or Fang, I don't even know. I don't even know what we're going to be calling it. But I owned all of those, and I thought, and I still believe this, guys, I was too heavy in the FANG stocks. I own too many of them. You know, I own Google. I still own Google, of course, my favorite stock, Amazon, Apple, you know, Microsoft as well, Facebook at a time. So I sold Facebook when it was going through the whole antitrust situation a couple months ago. I got out of it, and maybe it wasn't the best move, sure, you know. I missed this whole run-up, but it's okay because I reinvested that money elsewhere. You know, that money's still working for me. But yeah, I just wanted to get out of, you know, these FANG stocks. I was too heavy in the FANG stocks, and Facebook's the one that didn't make the list. And who knows, maybe in the future, I'll get back into Facebook once it drops. If it drops a decent amount, I might reconsider it. But as of now, I'm not in Facebook, but their earnings were great. Shopify also reported the stock selling off a bit and went down 1.1% today. They did EPS of $2.24 versus 96 cents estimated, and revenue is $1.12 billion versus $1.04 billion estimated. So beat revenue, beat EPS by a huge margin. Geez, guys, 224 versus 96 cents. What a beat there on EPS. And now we're right by this 50 moving average on the 4-hour chart, which if we dumped under this, we're probably going another $100 lower, maybe 14, 10, 20, 30, right around the 180 SMA here. So I'm going to be watching this dip on Shopify. Spotify is another one I'm watching here. And by the way, this company is a foreign company. I forget, are they from Sweden, Switzerland? You guys are probably laughing at me right now, but they're not from the U.S. That's what I know for sure. And look, they did a revenue of $2.33 billion, up 23% year over year. Average revenue per user was $4.29. That's down, and that's in euros, I believe. $4.29. That's down 3% year over year, which isn't that great. And premium subscribers were 165 million, which is up 20% year over year. I can't deny that that's pretty good right there. And the stock is just getting obliterated. It has been. I mean, gosh, guys, this stock was 387 back in February. Now it's at 222. It's well in a bear market. In fact, it's down 43%, which is just ridiculous. And at this point, I don't own Spotify. Excuse me, guys. I don't really plan on buying it. In fact, I haven't really done much research into it, fundamentally speaking, which I probably should, considering it's down so much. But it doesn't mean it's not a good stock. I mean, just because I don't own it doesn't mean it's a bad stock. You know, there's a lot of stocks I don't own, which are great stocks. And who knows? This could be a good pickup right now. If we look at the chart on the 3-year chart, wow, that's a clear head and shoulder. That's not looking good at all, guys. Left shoulder here. Let me show you guys. This is on the 3-year chart. Got the left shoulder right here, head right here, got the right shoulder right here, and by the looks of it, this has a lot more, maybe not a lot more downside, but it could be touching, you know, 175, 180, low 200s. Definitely possible, especially if it takes the low out from earlier in the month of May at about 215. If it takes that low out, we're probably going to be going lower, guys. So watch out for Spotify. Boeing is another one which reported, and this stock did well today. Boeing up 4%, reaching towards the top of the channel here on the 4-hour chart. It closed right under the resistance of the channel, right under the 180 SMA as well. And they did 40 cents of EPS versus the negative 72 cents estimated. So they pulled a surprise profit there, and revenue came in at $17 billion, and they actually missed the $17.78 billion estimate. Let me double check if that's right. Maybe I miswrote that. Let's see here. Did they actually miss revenue and the stock's up? That's pretty impressive, guys. Let me see this. Hold up. Yeah. Yep, they did. They missed revenue, and they have a Q2 backlog of $363.47 billion. So for me, guys, I'm looking at Boeing here. I need to see it break 240, 245. That would put it above the high point from a couple months ago in December. Also, it'd be putting it above the 180 SMA here on the 4-hour. And at that point, we could be seeing a breakout, technically speaking, on Boeing. And until then, I'm going to be sitting on my hands on this one, guys, waiting for this. So I'm going to put my alert at $240 per share. We'll see what happens at that level. I'm going to be watching it closely. And PayPal also reported... and by the way, thanks everybody out there that left me a comment yesterday for being a little bit sick. I'm feeling a lot better today, even though I probably sound like crap. I feel a lot better, to be honest. Yesterday my nose was running, my throat was hurting. Right now, my nose is all good. My throat is pretty good as well. Yeah, we're recovering, guys. So thanks for all the, get well wishes. You guys are the best. And let's talk a little bit about PayPal. PayPal did EPS of $1.15 versus $1.13 estimated. Revenue came in at $6.24 billion. Versus $6.27 billion estimated. So they missed revenue, which is why the stock is down about $15 after hours. But they beat EPS. And look, this is what we're seeing a lot with these big, giant companies. You guys saw yesterday with Google, Apple, Amazon reports tomorrow, I believe. But a lot of the big tech names reported good numbers, and the stock went down a bit. And this one reported decent numbers, and it's down a lot. What that's telling me is these stocks ran ahead of themselves a bit, and they need to cool off. And this is a much-needed pullback. Look, we hit an all-time high at 312. We topped at the resistance from back in the middle of February. Now we're pulling right back down towards the bottom of this channel. We're testing support at about 275, 280, which is great. That was a resistance from back in March, April as well, in May a bit, June as well, and it's right around the 180 SMA support here on the 4-hour chart. So I'm thinking if we consolidate a bit at 275, 280, 285, maybe we get some sort of move back up to about 300, 310 in due time as the dust kind of settles here. So I'm watching that for PayPal, and this is actually pushing down Square after hours, which if you guys are in my Patreon, this is a trade I took yesterday. I got into Square yesterday at about 251, sold it today in the 257s. Now we're down at about 255 after hours as we're dropping due to PayPal's, revenue miss there. And that's kind of what you notice, right? Companies that are similar and they don't report in the same day. I think Square reports one of these days coming up. If one company does poorly, that could influence another company that's in the very similar industry, which PayPal and Square are similar, and Square reports on the 5th of August. So, yeah, we made some money on Square today, and again, you get all my buys, sells, call-outs, a morning video on Patreon. That's linked right down below if you guys are interested. And Ford also reported today, ticker symbol F. They're up a good chunk after hours, up about 50 cents per share, which is nice. They did EPS of 13 cents versus -10 estimated, so a nice surprise profit there. And revenue just crushed it, guys. Revenue came in at $26.8 billion versus $23.84 billion estimated. And by the looks of it, let me just clear this drawing set. They're moving up, like I said, and they're squeezing deeper and deeper into the top of this wedge and towards that 180 SMA on this 4-hour chart. So let me actually move my alert down a bit. Let me just replace this quickly at 1450. There we go. I want to see and get alerted right at the resistance of the wedge. If we break out of here, guys, don't be surprised if Ford, after this about 2-month sell-off, starts going on another tear, on another rampage. I definitely could see that happening. And we have two other stocks. Let's quickly bang through these. McDonald's, MCD is pulling back as well. They did EPS of 237 versus 208 estimated. Revenue came in at 5.89 billion versus 5.53 billion estimated. So a double beat for McDonald's. And this is arguably, it got arguably extremely overbought. I mean, look, McDonald's went from 230 to 247 in literally a couple of days. Now we're pulling back down towards that 240, 235 level, which held, or rather it was resistance throughout May into June, July, and it's right around that 50 SMA support here on the 4 hours. So I wouldn't be surprised if buyers stepped in between 235 and 240 on McDonald's. And Qualcomm is the last stock for today. They did EPS of $1.92 versus $1.67 estimated. Revenue came in at $8 billion versus $7.55 billion estimated. So double beat for Qualcomm, and the stock is it's up. Wow, it's up about $3, more than that, $3.50 after hours. And by the looks of it, guys, we're about to take out the high point from the past couple of months. You guys can see the past couple of months, ever since the end of April, we've been struggling at 145. You can see it here. We topped there at about the end of April. Also, throughout July a couple of times. So I'm thinking this ascending triangle that we're seeing here on the 4 hours playing out, and Qualcomm could potentially start taking these levels out from 145 to 147, 150. That is where I can see it going in the short term. So that's it for today, guys. I hope you all enjoyed it. If you did, smash the like button, subscribe, leave me a comment, and go down below and check out my Patreon. You get all my buys, sells, call outs there, a morning update video, and a bunch of exclusive content. That's linked down below. And you could also get your $50 from M1 Finance. Simply use my link, deposit $100, and we each get $50 to invest with, guaranteed. All of those are linked down below. I'll catch you all in the next video. Thanks for tuning in again, as always. Keep crushing the markets. Stay safe out there, guys. Peace out.